Welcome to the last day of 2019, last day of trading for 2019. And with that, we have some last-minute questions regarding radioactive trading, the blueprint, bulletproofing your stock positions, and the 8 special bonuses that are available through midnight tonight. Now, a lot of our questions came through from Friday's special end-of-year open forum Q&A session. We have questions from Zaid, from John, from Guy, and a few others that came via email in the last 24 hours as well. So some of the questions that came up: is there a way to hedge that initial married put position if the stock falls 10, 15, or 20%? Is the electronic copy easy to follow on screen? If the stock falls, should you sell the put and do the stock repair, the tool that's available on Power Options? Is the blueprint in PDF or only videos? Is bulletproofing possible? Or do I need to enter positions in the portfolio to see bulletproof scenarios? So maybe you have some of these questions as well as you're considering picking up that blueprint in the radioactive trading manual prior to the end of the special bonuses, which end at midnight tonight. Well, let's take a look at these brief questions. First, we're going to take Zaid's question. Is there a way to hedge the married put position if the stock falls 10%? The short answer is yes. The long answer is yes, but would you really need to do that right away? Let's take a look at a recent married put position. We'll just go right into the search here on the Power Options suite of tools. And we've got a fair amount of listings here that match our criteria as discussed in the blueprint. I'm going to start off with just Winnebago, trading at $52.91. I'd buy the July 60 put following the technique, and I'd have a risk of $361, or about 5.7%. Using the midpoint prices, we get a little bit better, a maximum true risk of only 5.4%. Now, if the stock falls 10%, roughly $5.30, so let's call it $47.60, even in the first 10 days or so, am I going to be at the maximum loss of 5.4%? Not really. That maximum loss only occurs if I hold the stock all the way to expiration, make no adjustments, collect no dividends, and the stock's trading below the put strike price. Remember, this was a July put, so it's far out in time. But let's take a look at what we would consider happening. Down below, we're going to use that calculate expected profit and loss field. We're going to do that $5.30 drop to $47.60. And let's just say it happens in the next 10 to 15 days or so. Let's go to standard January expiration, the 17th. Stock falls 10% in the next 17 days. Am I going to be at that max loss of $344 or 5.4%? The answer is no. Yes, I'm going to have a 10% drop on the stock, but I'm also going to have an increase in the second asset. It's not just an insurance policy. That put is a second asset. So the maximum loss is only $208. That's not too bad. It's still a loss, but it's not the maximum loss. Might only be at a 3.5% loss on the position. So what would I decide to do at this time? Well, thankfully for the 12 different income methods discussed in the blueprint, I can restructure the trade at this point. If that did happen with that 10% decline, I can lower the cost basis and keep insurance in place. So if the stock recovers, I can get more advantage of the upside profit. If I think the stock's going to continue to fall, I can use another income method to put myself sort of in a straddle position where if it continues to decline, I may still have profits to the downside as well. Or, from the full chapter in the blueprint, I could decide just to exit this married put position, take my 3.5% loss because the position did not work out as I expect, move on and find a new position that matches the trend I'm looking for, knowing that even with a 10, 15, or 20% drop, I'm only down part of the maximum risk I could have taken on the position. So, The answer is yes, you can hedge it, even if the stock falls 10% in the first 10 or 15 days. You could do a different structure at the opening to profit in both directions as well. Or I could choose just to exit the position, take my small loss, and make it back with another position that's going in the right direction. All of that, of course, is described in the blueprint. Now, following up with that question, we had a follow-up from Guy. If the stock does fall, should I sell the put at 326 and do what's called the stock repair? Another tool that's available on Power Options if your stock has declined or your covered call position has dropped and you want to get back to break even. Well, the stock repair uses a ratio spread to help you get back to break even faster. Actually, it is one of the 12 income methods in the blueprint. It's income method number 5. But what I wouldn't do is take off the insurance policy at this time, even though it had that $3 gain, which would knock down my cost basis on the position to about $50 with the stock trading at 47. I could do the stock repair at that time, but I wouldn't want to do it without insurance in place. Because if the stock keeps falling, I still may lose more, and if I didn't take advantage of that put or restructure the insurance, then I could suffer larger losses even with the stock repair in place. So the way to repair married put position when the stock falls, or using combinations of those different income methods that has its own chapter in the blueprint. If the stock rises, stagnates, or falls, there's a chapter on combining income methods. That approach is all discussed in the blueprint, but I wouldn't just take the profit and use the stock repair and leave myself exposed further down in price. Now, Zaid had another question that came in regarding specifically the content. And Zaid wanted to know, is the blueprint in PDF or only videos? Well, as you can see here, if you go to radioactivetrading.com/EOY and click that blueprint link, the blueprint is an electronic version, not a PDF, but you'll get instant access once you purchase the blueprint. You'll be able to access the content online and take advantage of the 8 special bonuses if you pick it up before midnight tonight. Now, the blueprint is the full text that describes the ins and outs of the radioactive trading married put technique. But we also offer something called the Home Study Kit. And the Home Study Kit includes the full work of the blueprint, plus access to the 6 Mastery Series videos, each one about an hour and a half to 2 hours long, that goes through some of the finer points of the income methods and proper structure of the radioactive married put, as well as showing different examples in a video format for those that prefer not to learn just by reading a text. So the Home Study Kit includes both the electronic copy of the blueprint, which you'll get instant access to, and the 6 Mastery Series videos as well. But if you purchase the blueprint before midnight tonight, later on, into 2020, January, February, March, you can choose to upgrade to the Home Study Kit to access the 6 Mastery Series videos for just the difference in the prices. If you just bought the 6 videos by themselves, it'd be over $300. So they are available in video format, but there are things that are included in the videos that aren't in the blueprint. And there are things that are in the blueprint that aren't included in the videos. Really, the full work that you need to master the limited risk radioactive trading techniques and the 12 different income methods is contained in the blueprint. The videos help with different examples, and for those who prefer not to learn in a straight text format. And Zaid had a follow-up question to that. Is it easy to follow the electronic copy since it's not in a true PDF form? And the answer, I feel, is yes. So on our learn.powerup.com site, where you'll access the full text of the blueprint, you can navigate through the different sections and different chapters, see the full text cleanly, and you can scroll through it. Each chapter, each section, when you're ready, you'll also see images and graphs to help with the visual understanding of the principles that are discussed. So although it's not in a true PDF format, I feel it's very easy to follow along and view the online electronic version of the blueprint. And of course, video access if you pick up the home study kit to the 6 Mastery Series videos. And our next question came from Guy as well. It's along the lines of, is bulletproofing possible? Is it possible to take a no-risk position, cancel all of the risk, and have a bulletproof trade? And the answer is yes. And we actually showed this earlier in our journey through the blueprint and the end of 2019 as we head into 2020. We took the position that we opened during our webinar, Let's Make a Proper Protected Stock Trade. Yandex was one of the two. And a few days later, we did see an opportunity where we could have used one of the 12 income methods to bulletproof the position. What we saw in that is I could take, even though time has passed, and even though the stock isn't up as much as I would like, but we were able to move this put that we paid $8.25 for closer in time with the same insurance policy in place, which cut the risk only down to about 0.4 or 0.3%, about 19 or 20 cents from the 7% we started with just after 10 days. This is when the stock was trading around $44 per share. Then we combined it with another income method to cancel all of the risk and still have a guaranteed profit to the downside and a reasonable profit to the upside. Or we could have left it with a very small risk of only 0.3 or 0.4% and had unlimited upside profit potential if the stock continued to move or going through earnings. That was in the example of income method number 3, the Bulletproof Vest, which was shown in the Is It Time for an Income Method video. This one won't be it now, but let's just take a look real quick. I'm going to sell my initial January 47 put option, which is now trading only at about $7.50. 10 days have passed, but the stock has moved up over $1 from where I purchased the position. So I still have a profit if I decided to close right now. Let's say we moved into January, moved closer in time, kept the 47 put, but only paid about $2 for this position. How would that change my dynamic? Well, we sell to close, buy to open. It's going to change my cost basis on the entire position down to $45.91, and I've got a 47 put still in place. So this is in fact a bulletproof position, a negative risk to the downside. Not to say that I would do this position based on my goals for this trade, but it shows that bulletproofing is possible. And finally, Guy had a follow-up question to that as we looked at the Yandex position through the Power Options portfolio tools. And Guy wanted to know, did I need to enter the positions in the portfolio to see bulletproof scenarios? Not necessarily. You can use other charting services or graphing services. This just makes it 1,000 times easier. So I have all my married puts listed here in the portfolio pages on Power Options. I could simply go to Position Actions and then Position Analysis to see the total breakdown of the position and view what income methods are possible. In this case, we've got a limited risk position that is up in price, currently have a liquidation value if we closed both at 16.3%, and if I held the put for another 171 days and did nothing, I'd still have 8.5%. But down below you see potential rollout opportunities, and anything shaded here in pink with a negative risk value is a bulletproof position. Here I could bulletproof with income method number 1 or even income method number 4. And it's great to see things numerically, but with the power of this tool, I can also see a side-by-side comparison of my original position in red and in red on the profit and loss chart. And if I make the adjustment, I now have a bulletproof position, guaranteed profit of 2.5% or $970 with unlimited upside still available. So is it necessary to use Power Options portfolio tools to see rollout opportunities in bulletproof? No, but it's helpful. because some of the concepts of radioactive trading are already programmed in to evaluate those rollout opportunities. So rather than trying to use just a standard charting service to play around, rolling or adjusting calls and puts to see if you're bulletproof, this shows it for you right away. Also, if you're just using a tool to try to see if the position is bulletproof, but you don't have the blueprint to know the ins and outs of the different income methods, we showed before earlier during this journey that you could actually structure it wrong and increase your risk in the direction you thought the stock was going to go. You might bulletproof to the downside, but you might actually have a higher risk to the upside with the wrong structure. And that's why the blueprint is important. It's important so that you have access to the knowledge of when and how not to use those 12 different income methods to not only keep your risk low, but to lower the risk, potentially bulletproof the trade without getting yourself into trouble. And remember, you want to pick up your copy by midnight tonight to lock in those bonuses before the end of your bonus offers end, and mainly so you can start trading immediately with safety and with a second asset that works in your benefit and advantage of the other income methods to potentially bulletproof your trade. Remember, go to radioactivetrading.com/EOY and pick up your blueprint before midnight tonight to get the bonuses and to start trading safely with the potential of bulletproofing your positions and still the ability to generate income going into 2020.